Hi, I'm Sarah Young with NAR's Government Affairs Department. I'm here with Brian Chappell, one of the country's foremost experts in the Federal Housing Administration, or FHA. We're going to talk about FHA's high mortgage insurance premiums. In the aftermath of the housing crisis, people turned to FHA to keep credit flowing. Many homeowners were able to buy homes even though private financing had largely disappeared. Unfortunately, FHA's finances took a hit, and so now it's trying to improve its finances and also bring private credit back to the market. One way it's doing this is to raise its mortgage insurance premiums. Since 2010, FHA has raised its mortgage insurance premiums 5 times. A homeowner with an FHA mortgage pays almost 20% more in fees than they did in 2009 on their mortgage payment. With rising interest rates and rising home prices, mortgage financing for FHA is becoming increasingly out of reach for many home buyers. Home purchases are being delayed for qualified home buyers that would otherwise use FHA financing. I know that FHA is under pressure to improve its finances, but are these increases in mortgage insurance premiums working against FHA's mission to provide affordable mortgage options for many home buyers?
Thanks for that question, Sarah. FHA has 2 fundamental missions. The first is to serve those home buyers who are not adequately served by the private sector, and the second is to operate at no expense to the American taxpayer. And it is a delicate balance, and we have to give the administration a lot of credit for the way they've handled it to get FHA back on sound financial footing over the last 5 years. But we also are faced with a problem today of home ownership opportunities are diminishing for the people that the government cares about the most. And while there are some positive signs out there, for home buyers who were the typical FHA market, those with credit scores between 620 and 680, have seen their home ownership opportunities decline 90% since the housing crisis started in 2007. And so where we are today is we have a serious problem with access to credit, and we need all hands on deck to sort of deal with the problem. And not that changing the premium is going to be the end-all, be-all of this issue, but it's certainly going to help, and it's something that has to be part of the solution.
Great. We've seen reports that FHA's finances are improving. I don't know how this could be. I thought FHA had to take a $1.7 billion draw on the Treasury last fall.
The FHA did have to take a draw from the Treasury of the $1.7 billion like you mentioned. However, it was a mandatory draw caused by federal budgetary rules. It really was not necessary for FHA, and in fact, FHA now has $47 billion in reserves to pay claims. In 2008, FHA only had $28 billion of reserves. So it has substantially more funds to pay for claims. And secondly, the cause of the draw was tied solely to the reverse mortgage program. And while it was caused because home prices dropped 25% and the government's incurred more risk because of that in the reverse program, it had nothing to do with the forward mortgage program, the Section 203 program that everybody's familiar with. So yes, there was a draw. It was a technical draw, and HUD's even said that themselves, but it really doesn't give a picture of what the fund looks like today. And in fact, we are quite optimistic about the fund because of the credit quality of the loans being made today.
Well, that kind of leads to my next question. FHA's 2013 audit states that FHA is on track to meet its 2% capital reserve requirement by 2015. Is this true? Is this possible?
It really is, Sarah, because we even got better news in the President's budget that came out a couple months ago. FHA now has over $7 billion in reserves, where last year it was a negative $1 billion. So there has already been improvement. But the real reason for optimism is the performance of loans in the FHA portfolio. They really have improved dramatically over the last several years. As home prices have improved and the credit quality of the loans FHA originates has improved, we've seen sharp reductions in the delinquency rates. We've seen claims fall, we've seen losses on claims fall. So by every measurable standard, the FHA portfolio is improving.
That's great. That's great news. We've heard that HUD is considering limited reductions in premiums for home buyers who participate in pre-purchase housing counseling. Can you tell me more about this program?
Sure. The program we're referring to, Sarah, was in the President's budget, and it's called HAWK, and it stands for Homeowners Armed with Knowledge. And it's really a counseling program. And while we welcome any ideas that will improve the performance of the fund and help home buyers buy homes, we're really concerned that it doesn't go far enough. It does help lower the upfront premium a little bit after you complete 3 stages of counseling. 2 have to occur before the loan is closed, and then 1 occurs after the loan is closed. And we are pleased that this program is there, but we need programs that help deal with the access to credit. And the fundamental part of this program would not reduce the annual premium until there had been at least a period of time of the borrower making their payment, whether it was 1 year or 2 years. Then they would lower the premium possibly 25 basis points. And well, that's a positive change, and we wouldn't discourage it. It won't help to get borrowers approved at time of origination. And that really is the more immediate problem today. So the HAWK program is a good initiative, and I'm sure we'll all support it, but we need other initiatives to deal with the immediate problem, which is access to credit.
Well, that's great. That's such good information. It's encouraging to hear the FHA's finances are improving, but obviously we could do more, and we want NAR members to know that we're still working hard on this issue. We know it's an important issue for the membership. In the spring, NAR President Steve Brown sent a letter to FHA Commissioner Carol Galante urging her to look at the premium structure and consider reducing mortgage insurance premiums. NAR staff continues to work with staff at the Federal Housing Administration on a daily basis on this issue, and we're also working with industry partners who also believe that mortgage insurance premiums are too high.